When do you think the market will realize the value in all of this, Tasha?
So I think over the next 5 years, we should actually be publishing an updated Tesla price target very soon. But if you look at our 2026 forecast, it would suggest that Tesla's price could top, $1,000 per share by 2026. So that's up from roughly 200 today. So again, I think, autonomous driving as a whole could be a multi-trillion-dollar opportunity over the next 5 years. So even, getting a small share of that market would be extremely meaningful for a player like Tesla. And we really see them as in the lead here.
Did you know that Ark Invest has predicted that Tesla stock will be worth around $500 by 2026? The American investment management firm said that Tesla has an advantage over rivals, adding that the potential value of a $25,000 vehicle could become a reality. This is just one of the many predictions that Ark Invest has made about Tesla, and now the firm has revealed that they will soon release a new Tesla stock price target for the car company. Hey guys, welcome back to Tesla Tomorrow. Since the firm's 2024 analysis, Ark Invest has increased its assumptions for Tesla's capital efficiency. Previously, Ark estimated that Tesla would spend $11,000 to $16,000 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.33 billion on capital expenditures and produced 509,737 vehicles, an increase of 144,505 vehicles from the previous year, suggesting that its capex per incremental vehicle produced was roughly $9,200. Ark Invest also predicts that Tesla will accumulate massive revenue in the future. The investment firm estimates that Tesla could achieve better than average margins on insurance thanks to the highly detailed driving data. What other factors could have been considered by Ark Invest? More details to come in this video, but before we get into it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla introduced its insurance product in 2019, back in August. Although it is currently available only in California, Ark believes that in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies. And because its vehicles have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dynamically, lowering customer acquisition costs, and increasing margins. According to Ark Invest analysis, Techakini, Tesla has an advantage in autonomous driving. The future of AI is rapidly changing the landscape. And that's because the present innovations in the field of AI are accelerating the field as a whole at such a rapid pace that it is tough to keep up. AI's influence on technology is very significant because of how it impacts computing. Through AI, computers have been able to harness massive amounts of data and use their learned intelligence to make optimal decisions and discoveries in lesser amounts of time than it would take humans. Artificial intelligence drives down the time taken to perform a task by enabling multitasking and easing the workload for existing resources. It enables the execution of complex tasks and also saves costs that would otherwise have been needed to hire human labor. Tesla's FSD is based on AI, and it will be used to power its humanoid robots. Although Tesla has long offered a driver assistance system called Autopilot, which can steer, brake, and accelerate its cars on highways, full self-driving is still something different, and it is an effort to extend this kind of technology beyond highways and onto city streets. Keeney noted that Tesla has proprietary data which nobody else in the industry has or can even use. To further pursue its goal of adopting a sustainable approach to autonomy, Tesla has built a database that will take other EV companies years to accomplish. The car company is already containing and collecting a large amount of data from the vehicle's owners in its full self-driving beta test fleet. Experts have said that a company like Tesla, which has obtained and is still obtaining enormous amounts of data from its full self-driving software, is in an avenged position because of the data that it has to acquire from millions of cars around the world and on the roads, driving billions of miles. With more data collected, Tesla can improve its full self-driving capabilities. Data collected is used to develop and refine Tesla's self-driving assistance system, which Tesla sells to its customers as a value-added service. It is noteworthy that this is a simple software update, and no additional hardware is needed to be installed. Yet, it is sold to customers at an additional cost. For any EV company to even come close to Tesla, they'll need to collect a lot of data and then build on that data. Considering the length of time required for this, it is fair to say that no one is coming close to Tesla anytime soon. However, while Tesla takes the lead in AI amongst automakers, recent news about Elon Musk may be suggesting the CEO is not fully invested in AI. The Tesla CEO and a group of artificial intelligence experts and industry executives recently called for a 6-month pause in developing systems more powerful than OpenAI's newly launched GPT-4, in an open letter citing potential risks to society. In the letter issued by the Future of Life Institute, powerful AI systems should be developed only once it is confirmed their effects will be positive and their risks will be manageable. Elon Musk, who is one of the co-founders of industry leader OpenAI, admits that AI stresses him out. He also expressed frustration over regulators critical of efforts to regulate the autopilot system, and has sought a regulatory authority to ensure that development of AI serves the public interest. Seeing that Tesla is already making its way into artificial intelligence, it is unclear of what the future of AI will be. Ford recently raised the prices of its F-150 Lightning truck, and while this could affect demand for the car, it could also be a good thing for the Cybertruck. The Cybertruck is one of Tesla's most anticipated projects, and is expected to yield massive returns for the car company. Tesla bull Gary Black believes that the automaker will start delivering its Cybertruck in late 2023, and estimates 10,000 truck deliveries as part of his overall $1.9 million delivery estimate for 2023. Tesla CEO Elon Musk has also made several promises recently regarding the production of the long-awaited Cybertruck. He gave clarity on the production process of the trucks, which has been delayed so much already. Tesla's solar business is also a potential driver for the company's growth. In 2021, the company reported $801 million in revenue from its energy generation and storage business, which includes 3 main products: solar, its Powerwall storage device, as well as its Megapack. Although Tesla has not been fully focused on its solar business, there's still opportunities to fully optimize the business in the future. According to Gary Black, Tesla could possibly start to see revenue from its next generation of Megapack manufactured at its Lathrop in 2023. He added that currently most of the revenue is coming from the Megapacks built in Nevada, which is a much smaller and less efficient factory for building these Megapacks. For its solar installation, Tesla has only installed 3,000 of its solar roof systems in the United States since touting the technology 7 years ago. According to new research from Wood Mackenzie, that installation rate falls well shy of Tesla's guidance and ambitions for what it previously called its solar glass roof tiles. Wood Mackenzie noted that in late 2019, the company said it was aiming to manufacture 1,000 solar roofs weekly and to install 1,000 per week in the first half of 2020. However, average weekly Tesla solar roof installations only recently reached 21 in 2022. The car and energy company hit a high of 32 average weekly installations in the US in the first quarter of last year. With major ramp-up in Tesla's vehicles across its markets globally, this could be a sign that Tesla's automobile business is finally becoming financially stable. If so, it's a good time for the automaker to shift its attention to the energy business that has, for a long time, taken a backseat to getting the electric vehicle assembly line in order. It is important to note that the data collection needed for Tesla's FSD software is voluntary for Tesla customers. Also, most owners are more than willing to let Tesla collect data, since the automaker then uses it to feed its neural networks, which power autopilot and now full self-driving systems. This data also contains a wealth of information that can be used by forensic investigators and traffic accident analysts. Tesla can detect when drivers intervene during autopilot operations and send data back to the mothership to help the neural networks improve themselves. Tesla turns this stream of data into a new service that triggers customer engagement or enables the customer to get more from its product. The automaker has a strong lead when it comes to solving autonomy majorly because of the amount of data it's got access to, and this is why it's leading. What do you think the new price target for Tesla stock will be? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.